Hey everyone, welcome to this mini series on getting started in shares. In this series, which is divided into 3 quick videos, I'm going to talk a bit about why people buy shares, what they are, how you go about investing for the first time, and some of the things that you should be looking for. In this quick video, I'm going to talk about what shares are specifically, why people buy them, and answer some of the basic questions that most beginners have. So firstly, what are shares? Shares are simply part ownership of a business. So you can forget all the jargon and all the fancy words that you hear in the newspaper or on TV. At the end of the day, when you buy a share, you're buying a tiny little slice of a very big company. Now you might be thinking, okay, that sounds a little bit unusual, and it's because most people don't want to admit it, most of the professionals don't want to tell you the truth, that shares are simply a part ownership of a very large business and all the rest of it is just designed to confuse you. So, what do I mean? Let's imagine that you go down to the shops and you can buy a bakery. Instead of owning the entire bakery, which might be worth, say, $500,000, you can buy $500, as little as $500 of a company that might be worth billions of dollars on the share market. And what you're actually buying is what we call equity. And that's why shares are often called equities, because you're buying the equity part of the company. So you might have heard the word equity before. And equity simply means the ownership stake in it. So when you have a property that's worth, say, $500,000 and it has a $400,000 loan on it, the remaining part, that $100,000, is the equity that's in the property. And it's the same rule applies with shares. When you own the equity or the shares, you actually own that tiny little bit of ownership. So you don't have the debt, you're not responsible for the debt. What you are responsible for is that little bit of equity. So over time, we benefit, investors in shares benefit from a company improving in pricing, growing in price, but also from the dividend income you receive. So that's why people buy them. We buy them for the dividend income, which normally comes every 3, 6 months or once every year in the form of a bank deposit or a check in the mail. And the second way that we benefit is from the share price going up over time. So that's why people buy shares. From a bigger picture perspective, over the very long term, so say 10 or 20 years or longer, shares have actually performed better on average than almost any other investment you can make. So how much do I need to get started? One of the great things about shares and share investing in Australia is you can get started with as little as $500. There's often a little brokerage fee or a little fee to buy and sell, which could be about $10, but oftentimes when you join an online broker for the first time, they'll give you a discounted rate and you can get to buy shares for around about $500 plus $10, give or take a few dollars there. So with just $500, you might be thinking that's actually pretty good, right? Like that's really good, and it is. If you compare it to, say, property, which can be tens of thousands of dollars to get in the market, there's definitely a lower hurdle to get into shares. Next question: are shares risky? Yes, shares are riskier than, say, putting your money in a term deposit or putting your money in a savings account, and it's probably even riskier than putting your money into a property. Now, it's not much more riskier if you understand what you're doing and you're prepared to invest for the long term. It's important to know the difference between share prices bouncing up and down, because that's just random. At the end of the day, I believe no one can tell you exactly why that happens. People will try and explain it to sound smart, but at the end of the day, no one really knows for sure. But if you're investing for a very long period of time and you admit and you understand that, share markets will rise and fall, but hopefully over the long term they will do more rising than falling, and you understand the ins and outs of how things work, I would say that the risk of you doing something poor or badly or badly in shares is actually quite low. So it depends how you think about risk and how you set yourself up for it, but it's definitely risky if you don't understand what you're doing. So there's definitely a learning curve, but if you apply yourself, a couple of minutes each day, perhaps reading the financial newspaper or listening to a podcast about business or investing or something like that, you might actually find it's quite fun to learn, and it can be very empowering. The last thing on my list here is have a plan. As with all things, it's important to have a plan, and it's important to understand why you're buying shares. Are you trying to achieve a long-term goal? Do you want to retire early? Do you want to finally escape your nagging boss? Have a plan, have a goal. In the next video, we'll talk more about strategies and the different plans that you can put in place to maximize your time investing in the share market and some of the things that you should be looking for. If you're looking for more videos like this one and to fill in any of the gaps from this quick tutorial, be sure to head to the Rask Finance website where we've got dozens more free videos and courses. I'm Owen from Rask Finance, and cheers to our financial futures.